Hello and welcome back to the Rebel's Edge. Pete Najarian and I are going to bring you what's going on in the markets today as we get a lot of movement from certain sectors. And we'll describe those sectors and the movement, as well as some macro, some VIX, and predictive markets on today's Rebel's Edge. Well, welcome back, Pete. Chop, chop.
The clapper's not exactly the same.
No. And I hope it doesn't blow away in case we get a strong wind, because I was outside with it last night doing some California radio shows. But he is, of course, Pete Najarian on that side of the screen. I'm Jon Najarian here. And we're going to bring you macro, because we always start off with macro. Funny, Pete, how some of these four-letter networks start off with macro and then never get off it because, they don't really trade stocks. So all they can do is talk about macro. But
yeah,
we are the guys that trade
tiring.
Stocks and only want to talk that much about macro.
Yeah, I like our strategy.
So let's dive into that. I like our strategy better. Global equity markets moving higher. The UK had lower than expected inflation. That's good, of course. Consumer index rose only by 3.2%, down from 3.6%, according to the statisticians at the Bank of England, Pete. So that's a good thing.
Yeah, the market started off okay today, John. I mean, the NASDAQ was under a little bit of pressure, but I think that the pressure on the market's really, a lot of it at least, comes from what was happening in terms of Oracle with Blue Owl and this whole thing starting to blow up a little bit, and ending of a partnership. That seems to be something that's at least a trigger of some sort that's pulling on the markets right now. And we're seeing the NASDAQ specifically, but all three, the S&P, the Dow, and the NASDAQ, starting to pull off a little bit. So can they recover? Sure, the opportunity is out there, but at least for right now, that seems to be having people a little bit nervous about what's going on in the tech sector.
Yeah, and what Pete's referencing there, folks, is Blue Owl was going to provide $10 billion in support for one of Oracle's data centers. Well, they're not gonna now. Why? Well, because Blue Owl ain't doing so good, quite frankly. And does that mean they're tapioca? Don't really know, but I can't believe, Pete, it'll be real hard to find somebody to step into their shoes. But I'm not saying that the reaction so far is wrong. The reaction should be negative to somebody pulling out of basically a contract with Oracle to do that, right?
Yep.
Well, what do you got as far as VIX? I bet it's moved up a little bit.
Yeah, the VIX is starting to move a little bit. It's up. Last I looked, it was up like 5-6%, something like that. But it's in that same range that we've been talking about, John. At some point, I think we might see some form of a breakout. Now, it's going to take the right kind of news to get that to happen, and I'm not saying that's a good thing necessarily, but we'll have to see. We did have that volatility just a week ago. The VIX itself had some unusual volume. There it is right there, those February 37s. Yes, 37s against the 75s. Forget about the 75s for a second, other than the fact that brings the cost down. That's a spread. They're buying the 37s, selling the 75s. And so basically turning this into a 65 cents, give or take, as far as the option trade that comes from this thing. Pretty decent size, though, 20,000. So something to keep a pretty close eye on, John, I think. I'm not saying it's going to go up there. I'm not saying that's going to happen, but that does go all the way out to February. So there is time for this to react, and we'll see. I mean, that was the most recent volatility we had seen in terms of a trade. And I don't know if it's a 50-cent type trade or what. It's not that far away at 65, though.
No, not far away at all. I mean, that guy might, guy or gal, again, Pete and I don't know who it is exactly, folks, but we do know that Vol's moving up by about 5 or 6% today and has crested over 17 again. We'll see how quickly somebody steps in about that Blue Owl situation, Pete. Mm-hmm. All right. Let us tell you a little bit about what's going on at poly market, the prediction exchanges right now have a whole bunch of things going on. One of the very interesting ones for me was whether or not Warner Brothers is going to be taken out by Netflix, who right now is leading with about a 73% chance, according to people who are betting just on that, and only a 19% chance for Paramount Skydance. So I would say, I wonder whether or not the board at Warner Brothers really understands, Pete, that an 80 some odd billion dollar bid just for the streaming assets, because that's what Netflix wants, just the streaming assets. They don't want the cable. They just want the streaming assets. Well, I don't know if that's really better, $80 for that versus 100 and some odd billion dollars for the whole package, because that's what Mr. Ellison's son is bidding, 108 billion, I think, Pete, all in. Or you could sell just the streaming assets to Netflix, and then Mr. Zaslav or somebody is going to be stuck with CNN and all the crap that is over there with their declining, circling the drain, basically ratings and so forth. Is that what you want if you're on the board there, or you just want to grab as much cash as possible? And I would be in the favor of the latter if I were on that board, Pete.
Yeah, no doubt about it. It's interesting to see how that looks like. It's some of the movement there. It's going to be a battle anyway. We all know that. I mean, it just seems to be. I still go back to the days, John, where Netflix was a $60 stock, believe it or not, at one point in time. And I thought, you know what? Why wouldn't you buy this if you were Apple or somebody? I mean, it was such a great opportunity, but it never happened. How about Disney? Should Disney have bought it? And I think that was the biggest stumble that there was. But this is playing out pretty interesting. There's a lot of fighting going on left and right, John, and there's folks that are out there just trying to politically kind of move things around, it seems like. So definitely something worth watching, and maybe betting on it isn't such a bad idea at all.
Yeah, well, especially if you were invested in one side or the other. But yeah, that's going to be a battle royale, apparently, Pete. Let's talk about HUD 8. I used to be a consultant to HUD 8. That's when they were a Bitcoin miner. But you know what they are now, Pete? They ain't just a miner anymore. HUD 8 right now is basically, quote, an energy infrastructure platform, end quote. And the reason I bring that up is many of these miners that found that they're not making nearly as much money as they thought looked over at the data center side of things and said, maybe I should be, hitching my wagon to a data center, and all these megawatts that I've got as far as power that we need, maybe that'll get me a better return than fighting for the next Bitcoin with all the other miners. That's kind of what this is about, Pete. And today it was up as much as 25% on news that basically they're going to do a deal perhaps with Anthropic and FluidStack. So yeah, HUD 8 in focus yet again.
No doubt. And like you said, energy infrastructure, I mean, that's what they're looking for. They're kind of pivoting to some degree, but it seems like it might be a really good idea. At least look at the reaction that we're seeing today. They're talking about the plans to build out Louisiana and all the rest of it, John, adding to the IT capacities that they've got. This is a stock that, by the way, isn't one of these that's a pie in the sky kind of a thing. It's got a PE of 21. Like you said, it was up 25% earlier. Now, last I looked, it was up about 12%. I'm sure it's going to be shifting around, but I think this is a pretty interesting pivot that we're seeing happening right now from HUD 8. And is it the right thing? Quite honestly, I think that it is. So I'm pretty bullish about what they're doing in the pathway that they're making going in that direction. Anthropic and FluidStack, that doesn't seem like such a bad partnership, right?
Right. And, you might be able to throw Oracle into that mix sometime soon, Pete. At least, somebody might think that Oracle, until they find another financier, might need something like that. Yeah. All right, let's talk about Children's Place, Pete. I remember back in the day when you were always on the 5 o'clock show, that was known as Fast Money, that Children's Place was always something that Karen Feinerman talked about a lot. And this is not me, dissing on Karen Feinerman by any means, folks. Just saying it was one of the stocks she always would cover. Well, it's down over 36% today, and it was already down 54% year to date. So the shorts have been feasting on this one, Pete. I show the short interest is huge, and I know that's one of the things you watch for when we're looking for maybe a bounce, but also when it's that the shorts have been right, which they have been here. This is known as the smart shorts, according to Jeff Garbaz.
The smart shorts are doing pretty well so far, John. The one question you have to ask yourself is, at what point do they decide, you know what, we're going to take this off and we're just going to start to buy this back? And that's the difficult part of this thing. It's not so difficult to figure out the fact that they've done very well with their short side of things. Shorts are somewhere close to about 26% of the float, John. So when you look at that, you look at the amount of debt that they've got. You also look at the disappointments from Q3. They missed on the top. They missed on the bottom. I quite frankly didn't even know these guys were still around, quite honestly, until we were seeing this today. So the shorts are high, the outstanding shares, the whole thing. I'll tell you what, the volume today is absolutely extraordinary. Last I looked, they were well over 3 million shares, John. They average about 540 million shares, or excuse me, 1,000 shares, 540,000 shares a day. So 3 million shares is a pretty big jump. It's probably more than that right now. And they're not too far off those 52-week lows. So are they sort of going around the drain? I would say they're pretty damn close to the drain right now. The big question is, when do the shorts decide to cover?
Yeah. And if they finally do decide to cover, covering it, you got to keep in mind, folks, that right now it's $4.50. If they can get it back up over $5, you could see a pretty severe short squeeze. That is, if anybody still believes in their story, and somebody might, Pete. All right, Worthington Enterprises. This one came out with EPS that missed by a nickel, 5 cents, but the revenue beat by, pretty nice amount, almost $17 million. So they're also repurchasing a lot of shares. I like that side of what they're doing as far as the sales, positive. The fact that they're repurchasing shares, fewer shares outstanding, positive for shareholders. But nonetheless, it's down 10% today. And free cash flow, though, is still improving. So that's my take on why I might keep a closer eye on this one, Pete.
I think you're right. I'm totally with you on this one, John. I'm looking at it. Yeah, they lost by a nickel in terms of the earnings and what was expected, the 70 cents. They actually had 65 cents. I get it. People look at that. They're not very happy. But I'll tell you what, when you miss by the 5 cents, I'm less concerned about that because of the fact that revenue is a growth of almost 20%, 19.5% year over year, 327 million. So for that, along with what you mentioned, the free cash flow, up about 15%. They've done some repurchasing. They've got more to go. So I don't know, John. I look at this one as an overreaction, down about 10 or so percent today. I think this is one of those where I think if it starts to move around a little bit and starts pushing back up a little bit, I think this would be one that you'd want to be on for the ride.
What about J-Bill then, Pete? This one was up over 7 or 8% early on. Now, because of that Oracle slide, and again, that's that blue owl that Pete spoke of top of the show, J-Bill, basically comprehensive engineering, manufacturing, supply chain solutions. They are not really what you'd call a tech stock, Pete, but they might feed into that industry. And perhaps that's one of the reasons that the stock is only up 1% right now. Revenue growing here at about 19% year over year to a little over $8 billion. So I see a lot of positives here, but this isn't a negative. But my concern is it's awfully close to that 52-week high. With people rolling over on the rest of the market, you can see why they might lighten up on this one.
Maybe, John, but what I do like is that they
got out
there. They raised the outlook. They raised the outlook to 32.4 billion. Not such a bad number. That was a beat. They actually also raised on the earnings from where they were to a little over $11, $11.15, something like that. That's pretty impressive. the results that exceeded the expectations were the earnings. Wow, up 42.5%. I mean, that's a pretty big number. And then you mentioned about the revenue being up 19%. How about the intelligent infrastructure being a major growth level? So yes, they are very close to the 52-week highs. I see that. Did it pull off of that? Yeah, it pulled back just a little bit, but it seems to me like they're kind of in the right place, right time. I feel like that this is one that I'd keep a close eye on. I'd love to see some unusual option activity come into J-Bell, John, because that would be my trigger to say, you know what? I agree with them. They had a decent quarter. I like what the outlook looked like. It looked like it was pretty strong. I think this is one of those names that all we need is the one positive thing left would be, hey, is somebody willing to buy some upside calls? Because if they do that, I think we've got a good shot and an opportunity where we could put it up just as calls or turn it into a spread or whatever. I think whatever it might be, that is potentially an opportunity. So you don't have to touch it yet, but I think it's something to keep a very close eye on.
Yep, I agree. Like I said, the only thing that was giving me some pause, Pete, was it was so close up there to the 52-week high.
Yeah.
But, deservedly so. They have just built on better and better earnings throughout the year. All right. How about a little sports, Pete?
Yeah, let's just jump on this real quick, John. I'll tell you what, when you look at the transfer portal, which is free agency at the college level, since let's be honest, this is pro football now. I mean, it really has become that. But with that, all of a sudden, the money that's out there, this is going towards record numbers, John, of players that are going into the portal. Not only that, not just players, but high-end players. The number of quarterbacks that are considered 4-star, none of them are 5-star, but 4-star quarterbacks is just everywhere. Dylan Raiola from Nebraska, he's on there. DJ Lagway from Florida, John, he's on there. Kenny Minchie from Notre Dame, he's on there. Aiden Childs from Michigan State, he's on there. Here's the interesting thing. Forget about the portal for 1 second. Here's the direction I'd like to go with this. I think it's interesting, and everybody's going to be pouncing on these quarterbacks, and they look at Indiana exactly for how did they do it? Well, they did a lot of things right, but they went out and got the quarterback too, right? And that's the Heisman Trophy quarterback, and that's what really put them into a great position of where they are right now. How about the head coach at Alabama? The rumors are out there. He denies it. Of course he's going to deny it. But, you never really do know the answer to this one because Michigan needs somebody, right? I mean, somebody has to coach the Michigan Wolverine football team. And who's it going to be? Well, if DeBoer has any thoughts at all about leaving a place like Alabama where it's national title or nothing, Michigan wouldn't be such a terrible place for him to be. I just want to throw it out to you. Would you expect that there's any reason at all that he might take it? I mean, and the money might be there, John, because if anybody has money, it's Michigan. When you look at those folks that give them the money, they are loaded. So I think his numbers could be astronomical if he decides to go to Michigan.
Well, and where Pete's absolutely right is that Paramount Skydance, guess who that is? Larry Ellison. Guess who gave the biggest donation in Michigan history? Larry Ellison. And Mr. Ross down there with Related and so forth. So, I mean, yeah, they've got the money, Pete, but if I'm DeBoer, do I want to leave a great situation in Alabama for a slightly more difficult place to recruit, I'd say? I mean, even though they've got a great history, they've also got a great history of cheating. And the reason I bring that up is you don't think they're going to be under the microscope, Pete, for the next several years? And the investigations might not even be over yet. So if you're, the coach of Alabama and you're in the college football playoffs and you've got, SEC bona fides, do you really want to go up there to Michigan and have to face Ryan Day all the time without any sign stealing and without any players that maybe are not quite academically ready for Michigan academics? I don't know, but my answer would be no. I would stay down in Alabama rather than jumping out of the fire into the frying pan.
I'm with you, John. I'm with you, John. Although I think there's the possibility with the amount of money that it really could be, it could be astronomical, and it's not the same anticipation of the year as Alabama has. Alabama is national title or nothing. They don't care about the SEC. They care about the national title. They really do. Got the crap kicked out of them this year, by the way, by Georgia. So they've got a few losses on there, and that's not what people down in Alabama are used to or want to see. I think it's going to be pretty interesting. And if he went there, I wonder if a guy named Dan Lanning over there at Oregon, who used to be at Alabama, might go, you know what? I'll take that Alabama job. So a lot of things still moving around in college football. How about the NFL? We've got one of what I think might be one of the best games, John, of this year, potentially, based upon where they all sit. And it's the Thursday night game. So we all get the opportunity. It's the only game in town, right? And the Rams in Seattle, both are 11-3. They're getting trailed by 49ers, who are right behind them, by the way, and they have been absolutely rocking it of late. But both these two teams are going to be going at it. Both of them have had losses to the 49ers, by the way. So that's kind of interesting. They both also have had some big battles with the 3 losses that each of them had. I'm just curious, who do you think has the upper hand on this particular game, the Rams or Seattle? I think they are both great football teams. I think the quarterbacks have shown a lot about where they are, one of them being old, one of them being a guy who had been given up on until the Vikings showed what he really could do if he's at the right team with the right receivers, and now he's doing it again at Seattle. We got some damn good quarterbacks in this game, and really some damn good running backs as well. So it should be pretty fun.
Yeah, well, Lumen Field will certainly be rowdy. They will be loud. And Pete knows, because one of his good friends, I think, used to kind of run some of the crowd noise up there, because maybe some people have sort of surmised over the years that they boost up the crowd noise a little bit, Pete. Maybe. I'm just saying. But, well, the last time that Sam Darnold faced the Rams, he threw 4 picks, Pete. Yeah. 4. He's also coming off a terrible game where they couldn't get anything done, and they were lucky to survive Phillip Rivers. 5 years out of the league, Phillip Rivers. They're going to be facing Matthew Stafford, like Pete has said for weeks, this year's MVP. So I don't know, Pete, if this one shapes up very well for Seattle. The only things that they've got going for them is they're both 11-3, like you say, so they really are a good football team. But you wouldn't have known it from last week watching them play the Colts. And, you know, Ken Darnold put that behind him and forget about the 4 interceptions that he threw in the first time they met. But this will be a good football game. I know there'll be some hitting in this one, too, because Seattle loves to hit.
Well, and one of the things is you've got 3 losses if you're Seattle, and one of them is to the Rams. So that's a factor as well. I'll tell you what, it should be a really fun game. I'll tell you the one advantage that I think that the Rams have is their defense is damn good. They have some guys on that front line that are absolutely beasts. They've done a great job of drafting. They've done a great job having running backs that actually make passing a little bit better for the quarterback, which is always the key. Anybody who doesn't understand that, and there's a hell of a lot of GMs out there who don't understand that, but if you can run the football, your quarterback has a far better opportunity throwing the football as well. But so that's why I think both those 2 quarterbacks have had a great year. Good running backs are on their teams. Well, great stuff, John. Really appreciate it. I know you're busy as heck and got to get going. So you want to sign off?
Yeah. I'll tell you what, folks, we'll see you tomorrow at 1 p.m. Eastern, because I got to jump on a plane for a quick flight. But I hope all of you keep an eye on Oracle and that Blue Owl situation. And we'll see you tomorrow at 1 p.m. Eastern.